What's going on, guys? Today I just want to make a quick video, discussing kind of like some illustrations that, I've created here on the Google Sheets platform. These are just some covered call and collared ETF income, you know, tickers that you can invest in and, start building your monthly cash flow. Do remember though that, these aren't the greatest overall performing ETFs. So if your overall purpose for investing is growth, these ETFs might not be the best option for you. So as always, be sure to do your own research and discover your goals for investing before ever listening to someone on YouTube recommend different ETFs and different things like that to invest in. So this video is specifically for monthly cash flow. These aren't technically dividends. This ticker right here, DIVO, you will receive some qualified dividends with that ticker, but the other ones are mostly going to be distributions. So these three right here are covered call ETFs specifically. So this is the NASDAQ 100, this is the S&P 500, and this is the Russell 2000. What they do is they sell covered calls against this index and particular positions within that index. So as you can see here, the performance is not the greatest, but the trade-off with that, you are getting a 11% yield with QYLD, 8.88 with XYLD, and a 10% yield with RYLD. This one actually seems to be performing pretty well as of April 20th today when I'm recording this video. It's up 8% on the year, and you've also been receiving almost an 11% dividend yield. So that's pretty cool. NUSI, this is a more conservative ETF as far as you have downside protection. So they're actually selling a collared. So they're selling a covered call out of the money, but then they're also taking part of that premium and buying a put just so you can have some downside protection. This is a nationwide ETF. I can't remember exactly what index they're doing these calls on, but that is a little different strategy. So you do have some downside protection with this. These ones are not any type of downside protection. So if QQQ drops a huge amount, you're going to be taking a big hit. And the same with these other ones here with their indexes. Just because the strategy with this, you're selling covered calls, and it's a premium producing ETF. The fund manager, they're also getting dividends and capital appreciation from holding those stocks. However, you as the stock shareholder, you're only getting part of the premium, so 11% here. So do keep that in mind. And then the last one is DIVO. It is a dividend ETF, so they buy a lot of different dividend growth stocks, and the idea with that is they invest in companies that are growing their dividends, and they're blue chip companies. I believe most of their stocks are large cap, so that is their focus. They are also selling some covered calls, but they aren't necessarily selling them on each of their holdings, just like a certain percentage. That is Amplify. So that's Amplify. This is nationwide. These are the fund managers I mentioned, and then this is Global X. They own all three of these. So some different data points here. You can see I pretty much calculated the yearly dividend per share, the monthly dividend per share. These are the prices, so pretty cheap ETFs here. They're all monthly paying ETFs, and this is the year-to-date return on these positions. And then I kind of put this here just to kind of reference and get kind of understanding of how these are actually performing. So the VTI, if you don't know, it's the total stock market index vanguards, and then VOO is the S&P 500 ETF. So you can see here 11% return. Those are both performing pretty well this year, so they are beating all of these. But with that, you are getting a smaller yield. So, okay, so coming down here a little bit, these are just all the tickers above, and pretty much how many shares and what amount of investment it's going to take to produce this monthly income goal. So $10. Sorry about that, getting a phone call. $10 is the goal here. So if if $10 was your monthly income goal, it would take around $1,000 in QYLD, 1,300 XYLD, 1,100 RYLD, 1,500 in NUSI, and 2,448 in DIVO. So that is that. Let's scale this up a little bit. Let's get all the way up to 1,000. So $100. It's going to take a $10,000 investment, and then it just kind of goes up from there. And then scaling up to $1,000, it's going to take a little over $100,000 invested into QYLD to receive that monthly income goal. And then you can just see the numbers there. They kind of just gradually go up. It's a little less for our RYLD compared to XYLD, and so on. Do keep in mind though, these are income ETFs, so they might not be the best performing over the long term. So do keep that in mind. There's a couple other ETFs that Global X has created. This one is QYLG and then XYLG, and pretty much it's very similar to this, but instead of getting 100% covered call allocation, you are getting like a 50-50% blend. So you're going to get 50% allocation for the covered call premium, monthly payment, and that kind of bumps the yield down to like a 5 or 6% yield. But then you're also going to get 50% allocation to the NASDAQ 100 index, so you are going to get some of that capital appreciation. Now, you're not going to get dividends, for my understanding, but you are just going to get some more of that capital appreciation compared to those two ETFs right here. There isn't one for the Russell 2000 yet. I'm waiting to see if they're going to come out with one for that. That would be, I'm assuming it would be, similar to these, RYLG, and then it would kind of be the same allocation for that index. Okay, so that's pretty much it for this video, guys. Thanks for watching. If you got any value from it, feel free to hit that like button and subscribe below. Feel free to leave any questions or suggestions that you might have below. Definitely do your own investment advice before purchasing these ETFs, and definitely do some more research if you're interested in starting a position in any of these ETFs. These are all new ETFs that I've came across over the past few months, and they're relatively new, so there isn't a whole lot of history as far as how they perform over the long term. But yeah, so definitely look that up and get a better concept, and do some more research before investing in these guys. So, all right, guys, thanks again for watching.